Hello everyone. So I hope all of you are doing well. This is Sikrati Joshi, your very own educator, teacher, philosopher, guide, mentor, preacher, one and all, your mentor too. And this is the one-stop destination that is English curriculum, wherein or you can say wisdom era, English curriculum wisdom era, where learning happens and wherein we can actually connect with each other, bloom and blossom with each other, right? All right. So in today's session, I'll be taking up something else, right? Some new, some novelty, some novel topic would be there, and therefore some novelty would be there, right? So we are gonna be discussing about finance because it is, I think, very important for all of us, for all the human beings out there, to know about how to manage your finances, to know about uh, to have the financial literacy and financial freedom. So, what are we waiting for? Let's get started. In the meanwhile, I'll just have a look. I'll just check whether I'm audible and visible to you guys or not. So, actually, I'm meeting you after a very, very long period of time. Okay, I'm live. Long period of time. Yeah, perfect. So, all right. So we'll get started, and let me just share my screen. Yes. I hope it is visible. Yeah, it is. No. Okay, I'm live. Uh, it is. Yeah. So, we're gonna be covering about how we are supposed to manage finance, right? And how the system actually works, right? So hi, I'm Sikriti Joshi ma'am for those who are new and those who know me. You know me, guys, right? So you can reach out to me. You can contact us on this given number. Just drop a DM, message me because you know taking calls it becomes very very monotonous to you, and uh we all fall short of time because there's paucity of time. So let's utilize time for better things, and let's invest in better stuff, right? So let's move on. So, in today's session, I'm gonna be talking about the financial blueprint. Yeah. So it's a modern toolkit. You can imagine it as being a modern toolkit for which actually sorts of manages, protects, and grows your money, right? So it's a modern toolkit for managing, protecting, and growing your money. So then we come on to the growth engine part. When I talk about growth engine part, you have investments, then you have compounding, and then you have harvest, right? So you have to maximize the value through strategic allocation. So you have to be very very strategic. You have to have adopt a lot of strategies. Sometimes you will fail, sometimes you will achieve what the goal that you have been aspiring for, or that you have been wishing, or wanting to have. So sometimes you'll make it you'll make it, sometimes you won't be able to. But the thing is that we are not supposed to get uh demotivated, right? Because we are the ones who can motivate ourselves. Nobody else will come and rescue you, right? So we have accelerated returns, and then we have management system. So we have the budgeting part, then we analyze the budgeting. We should definitely analyze how, when there's a budget, right? You need to analyze it. You need to see where you are spending, how much you are spending, how much you are earning. If you are earning, if you're not, then saving is the best part, investing is the best part. And nowadays you do have SIPs also, you have uh provident funds as well, right? So many things are there nowadays. So we all just need to uh see what suits us. We need to see what is made for us, how we can tailor things according to us. Clear? All right. Yeah. Then we have to optimize. So you have to optimize it, as I've mentioned before as well, that you need to decide. You need to be decide. You need to decide, and you need to keep a track. So you can either have a journal wherein you are actually uh how much you have, how much money do you have, and how much money have you spent, what are your needs, what are your wants, uh, and how much have you spent on needs and wants, how much money have you saved for any sort of emergency. We need to talk about it. We need to talk. And especially I do believe that children are the uh, best people who we should be teaching these skills. So to be in order to be liberated, in order to have that kind of financial freedom, children are the best suitors. As adults need to understand the fact that we do need to tell and educate our kids about financial freedom. They need to know about it. You don't have to hide any sort of information, right? You need to discuss it as a family, as a unit. Then we have the tracking part, as I've explained, right? So you need to track your how much you're spending, how much you're earning, how much how much have you invested in whatever funds, right? Then we have streamline cash flow and spending. Yeah. So we discussed that as well, that aspect as well. Again, I am gonna be how you are supposed to join our family YouTube channel. So Wisdom Era is the name of my channel, right? It's the name of our family. Herein you're gonna be getting a lot of wisdom. So Wisdom Era, join our Wisdom Era family uh, at the earliest. And for any further queries, for any further doubts, for any further information or updates, you can call us on the given number below, or you can I would suggest that just directly DM, right? Then we have future foundation, right? Then we have security framework, and then we have future foundation, right? So when I'm talking about future security framework, we are going to be talking about protecting it, insurance, right? Well, like we do have insurance, so we are going to touch upon that aspect as well. and preserve, how we are supposed to preserve the funds and money, right? And make investments. So safeguard assets with robust measures. So how we are actually supposed to safeguard our assets, the money, right? And stay away from liabilities, especially students who are from economics background or from commerce background, able to relate to it, right? So future foundation, but I want everyone out there to have a knowledge about finance, because I am also learning simultaneously with you people, and I don't want anyone to miss out on important facts, right? So then we have future foundation. So we plan, we build, and then we achieve. So we are constructing a lasting financial legacy. So which is gonna last forever and ever. And when you leave some inheritance or legacy behind, that would actually make the coming generation really they would revere you, they would respect you. So you have to plan, you have to build, and you have to achieve, right? This is the future foundation. Clear? Then we have financial freedom, which is determined by management, not income, right? So just a second. Yeah. So you need to spend less than you earn. So always keep in mind. For example, if you are earning if you're earning 50,000, you need to spend less than you earn. So it doesn't mean that in the market some iPhone has come, right? Or some iPad has come, or some Mac Pro has come, right? So you are keen towards that. Okay, this month I've already got 50,000. Next month I will get 50,000. I can do it in EMIs. No, don't fall into that trap, because that is a kind of a trap that is laid out before you. And I do know that there are people who buy secondhand, but I don't believe in buying secondhand stuff. Uh, if you want to buy things by saving, right? So financial freedom is determined by management, not income. So you need to spend less than you earn. And if you're not earning, then also you need to spend, you need to be, you need to know how much your parents are earning, right? You need to respect that. And therefore, you need to be mindful. As you know, I have always been suggesting that you need to be mindful in your activities, you need to be mindful in your while you're studying, you need to be mindful about poems, about prose, about plays. Similarly, likewise, you need to be mindful about your spending, right? Then you have to second part would be that you need to save first and spend later, right? So you are supposed to save first. Always, whenever if you start earning, do not spend. If you have started earning, like if you're getting 30,000 in a month, or 50,000 in a month, or 1 lakh in a month, don't just, if you are getting 1 lakh in a month, one if you're earning 1 lakh per month or 2 lakhs per month, don't even think about that 1 lakh. All right, I'll just do away with, because you don't know for how long you are going to be in that particular position, or in that particular company, or in that particular you know workplace. So you have to save first and spend later. Third one would be investing for the long term. So you need to invest, you need to make investments for the long period of time, for the long passage of time, for long term. It's not about short term investments. It's not about that you are investing shortly, like in short periods. You It should be long term, right? Then avoid emotional spending. You need to avoid emotional spending. So sometimes we are driven by that. Oh, I love that diamond, I love that gold, oh, I love that iPad, I love that MacBook, I love that iPhone, I love the phone, I want, I sometimes that desire grips you so much and so intensely that we tend to give into buying, and ultimately we just sort of end buying things up. So we need to avoid emotional spending. Then never stop learning about money. Never ever stop learning about money. Always keep on learning about money. um always keep on learning about money, because money is valuable, that is very very crucial, that is pivotal, that is quintessential from my perspective. Because I have seen the um I have seen that how one person rises and how one person falls down. So I have seen the ups and downs, right? uh, I wasn't into investment at all. I wasn't into, still am not, but I'm learning, and I'll be learning along with you guys, right? So definitely, and uh, I should be able to, ultimately be able to master it. And along with it, financial freedom is not about how much you earn. It's also about how wisely you manage what you earn. So it's not only about earning crores. You might be earning in lakhs. You might be earning in thousands. You know, uh, what matters is that how wisely you make use of how wisely you make use of that money, are you how wisely you are able to manage that money, what you earn, right? So again, I'm reiterating the same thing. Join our Wisdom Era family for any further queries, updates, or information. If you have any doubts, you can let us know in the comment section below. And if you have any queries, kindly DM us, directly message us on the given number, on this given number, right? All right. Then we have constructing your financial architecture. So we have level 1, level 2, level 3, level 4, right? So level 1 is the foundation, level 2 is the defensive wall, right? Level 3 is the growth engine, level 4 is the tax optimization, right? So if I talk about the foundation, right? If I talk about the foundation, we are talking about cash flow, tracking rupees, because we are talking about India. So we are going to be, de- we are going to deal with rupees, right? We are going to deal with it, and budgeting basics as well, right? Then we have the defensive wall, right? So when, as the name only suggests, we are talking about defense. So defensive wall, we are in this be talking about emergency funds, debt avoidance, insurance. So there are several, like this insurance, health insurance, car insurance, phone is also there now. I don't know. But so many layers of insurance exist, right? So and we have debt avoidance as well. So sometimes, because you take loan, if you have purchased an iPhone, for example, I just gave you an example, and you have purchased it, you have taken it to basis, right? And now you are paying EMIs, and suddenly, all of a sudden, might be you lost your job. So now, from where are you going to get? Apart from, obviously taking money from your parents. Apart from that, keeping that aside, if you have to give it, if you are the one who is going to pay, and you have taken that responsibility, then in that case, debt avoidance, and how to avoid debt, not take any sort of loan, that is there. Emergency funds are there. Then we have the growth engine, so we have asset classes. Then we have compounding. So if you, like, for example, now if you invest 5,000, you'll get 10,000. Let's just assume. I'm just giving you a I'm just giving you random figures. So just to in order to explain you guys, compounding, early investing. Then we have level 4, that is tax optimization. So we have compliance, we have legal tax saving, record keeping. So we do have compliance, we have legal tax saving, and we have, because you might have seen a lot of people, or you might also be one of them, who knows how to save tax, because there are people that I have come across. They know a lot of ways, several ways how to um, avoid tax, which is kind of wrong, but it is not actually wrong. That's what my perspective is, because I'll tell you why. Because this taxation system, no, it was introduced by colonizers, by Britishers, because they wanted to take money from Indians. So it wasn't a thing that existed in India, but this entire concept of if we talk about microeconomics or macroeconomics, or the concept of economy, and no, the fall of economy, the rise of economy, everything, it came, and it is a result of Britishers, when they colonized us, when we were the colony of Britishers. So yeah, so it is given by them. So why should we take any sort of random thing from them? I am not in favor of that, personally speaking. Then we have constructing your financial architecture. So you don't need to become an expert overnight. Consistent learning and good habits matter more. So you don't have to be expert, right? You just have to be consistent. And I think that, nowadays, being a teacher, and even in my college, I because I was a delegate of MUN as well. I have been a delegate of MUN, and therein, we sort of talk about economies, and I was representing sometimes Democratic Republic of Congo, sometimes the other, nations. So sometimes what happens, because even in school, I have been a delegate of MUN. I have been a delegate of some country. I don't remember now, but yeah, I was there. So I was there in UK too. So keeping that aside, you have to be uh you don't have to be an expert overnight. I at that particular time used to think that, oh, how come these people are doing, because they used to show off, a lot, that this we are investing in this mutual funds, this whatnot. And when you start earning also, then also you have like ppfs, and you have a lot of stuff. So which nobody talks about, which nobody tells, uh, you know and honestly speaking, majority of the people, they aren't even aware. Even if they are aware, they don't want to spread that kind of awareness. So I want to be the one, I want to be the pioneer, I want to be the teacher who actually sort of, who is not from commerce background, let me just tell you, but still wants to learn. I am a kind of a person who is interested in learning each and every aspect of life. I want to taste everything, I want to taste everything, right? Got it now. So yeah, once more, join our wisdom era family, right? For further updates or information, DM on the given number below. Now, so learn how money flows through your life. So you have income, you have assets, you have expenses, and you have liabilities, which I've spoken before as well. Now, income is the money which enters your system. So what is the rule? So track every single rupee where it goes, right? Where every single rupee goes. So, for example, if you are eating an ice cream, so keep a track of it. Like today, I ate ice cream which was worth this and so and so. If you are eating choco lava cake, write down the price of it. If you are, for example, I have been spending a lot, but from now on, I have decided that I'm gonna be saving more than uh, spending, because a lot has been spent and a lot of money is already flowing out. I don't know why, but it is indeed. And no, nothing is coming. So yeah, so I have to figure it out myself. And you guys also have to figure it out yourselves. But for you, you guys are still lucky that I'm there for you, right? So you have to track for example, I had chocolava cake, or I had black forest, or I had that, my favorite cake. Wait a second, hold on. I am not able to remember my favorite cake. So this is what happens when you are, coming live after a long period of time. So, all right, I'll just move on. Then we have assets. That's also chocolate cake. All right. Assets, things you own that hold or grow in value. So things that you're holding, things that you are actually owning, like you own and that you're holding, and they could grow in value, they increase in value, so there is rapid increase in their value, so they are your assets, as the name only suggests. Expenses are that expenses are what you kind of expend, right? The kind of expenses that you make, right? So money leaving your system, so money flowing out of your system, money that is leaving your system. So this is a kind of system, it's leaving that hierarchy, right? Then we have liabilities, so what you owe to others, that is kind of loan, right? EMIs, right? So liabilities, what you owe to others. Then yeah, for further information, do contact Wisdom Era, our family, YouTube family. Join our Wisdom Era YouTube family for further information and updates. DM on the given number. And becoming financially literate means tracking these four elements to make informed decisions, right? All right. Then we have categorizing every rupee before allocating it, right? So we have expense, we have needs and wants. So, as I have spoken before, so absolute essentials for survival and basic functioning. So needs are absolute essentials that exist, that you need for survival, right? For or in order to function in a basic way. For examples, if you are living if you are for example, you have several examples: rent, groceries, essential utilities, basic healthcare. These are included, these fall under the category of needs. Then we have wants. So these are the desires that improve lifestyle but are not strictly essential. Examples: dining out, subscriptions, like you guys might be having. I don't know. I don't have. But subscriptions, luxury clothing, vacations. So dining out, right? For example, if you're dining out, you have Netflix subscriptions, which I don't have. uh, so luxury clothing, I and vacations. So yeah, these are wants. These are included under wants. Then we have call to action. You must know the exact difference between a need and a want before creating a budget. So you should know the exact difference. What is the difference between a need? So you can have your, I know you do have leisures. So the commerce students or the people who have done their MBAs, they have their leisures, they have their, um, so you can have a journal normally, just a normal journal. You can have needs, a row for needs and a row for wants, right? And then you can write down what comes under needs and what comes under wants, right? And then spend accordingly and save accordingly. Then we have 50, 30, 20 rule, 20 budget allocation rule, right? So 50% is for needs, 30% is, for wants. So 30% is for wants, 50% for needs, and 20% for savings and investments. Now, so coming on to 50%, that is for needs. So it's the largest chunk as it is clearly visible, ensuring survival and stability. So it ensures survival and stability. Why? Because it is including the basic requirements that a person has to meet. Then we have for wants, 30% for wants, right? Which has to be kept with to prevent lifestyle creep while allowing enjoyment or leisure, right? So yeah, then we have 20% sometimes some words become tongue twisters, and it is kind of difficult to you know see it at that particular moment. I don't know why. I does it happen with you guys, or at night it is happening to me. Then we have 20% for savings and investments. So the crucial growth slice is over here. So for savings and investments, again, we have the crucial growth slice, right? Then we have process checklist. So we have step one, track where every rupee goes. So you have to track where every rupee goes. Second step is to allocate according to the 50-30-20 ratio. So you can consider it as a 50 is to 30 is to 20 ratio, right? Then we have step three, that is review your budget every month. I would suggest review your budget after every 5 days, because I'm gonna be, I think, starting with it. So review your budget after every 5 days. You know, at least I'm going to keep a track of what I do, because I have been wasting a lot of money. So yeah, I need to be vigilant about that aspect. And I want you guys also to be vigilant about that aspect. All right. So then we have fortifying your foundation against financial shocks. So there's market also, which we are going to be talking about. So you have market, and you have stocks as well, you have shares as well, right? So simultaneously, when you have stocks, when you buy stocks in a market, when you're buying stocks in a market, you are going to sometimes be successful in it, and sometimes you're going to get get failure, right? So that failure, that label failure, is referred to as a kind of a shock, right? So the shield is emergency fund. So the what would be the target? The target would be that you should save 3 to 6 months worth of essential expenses, right? So for example, if tomorrow, if any economic crisis is there, and our economy just crash, the market will also crash down, and all of a sudden happen. I i guess all of you know, you have to be careful, right? So you have to save 3 to 6 of essential expenses. Rule, what should be the rule? That you have to save easily accessible accounts. So I would say that you have to, whatever you have, keep it in bank, don't keep it I mean, keep it in bank, keep it in a wherever you feel comfortable with. You have bitcoins as well, so you can invest in gold, you can invest in stocks, you can invest in uh, shares, all that stuff. Then the which is the unnecessary debt. So that's what we are calling it as the leak. Therefore, we are calling it as the leak, because we are talking about unnecessary debt that is there. So pay credit card bills in full every time. So when you start earning, you will be asked by the person sitting in the bank, uh, by the people, right? By the workers out there, that take this, you know, uh, take this credit card, take this debit card, take this, you'll get these many points and whatnot. So don't, what my suggestion would be to you guys would be that for a short period of time, you might think that it is an asset, but it is not. Don't fall into that trap either. So pay credit card bills in full every time. Borrow only for important purposes. So if you want to borrow, if you feel like that there's a lot of need of, there's a lot of need for borrowing, then you can go for it. Then understand absolute interest rates before ever taking a loan. So you have to understand absolute interest rates before ever taking a loan. So you understand absolute interest rates before ever taking them. Securing the perimeter of your belt. Now perimeter. So you guys in maths might have studied about perimeter. So yeah. So yeah, one more thing. Join our Wisdom Era family, our YouTube family. For further information, kindly DM on this given number. Then securing the perimeter of your belt. So we have the inner wall, that is insurance, and outer wall, that is scam defense, right? So have comprehensive health insurance. You need to have that, and have adequate life insurance. So you need to have adequate life insurance. You need to have adequate health insurance, and note that premiums for these also offer tax eligibility under applicable provisions. So premiums for these also offer tax eligibility. So when you go in for, like, you have premium for everything, like um, for example, if I offer you, like, I have silver, gold, platinum batches going on. So if I call my platinum a premium batch, uh so you would be paying for it, you would be paying higher for it, right? So if you are going in for premium, right, they would offer you tax eligibility under applicable, but there are certain conditions laid out. There is this outer wall, that is scam defense. So you have to be aware of get rich quick schemes. So there are going to be people who are going to be talking about and who are going to influence you in this direction, that, oh, you'll get rich quickly, trust me. Or even your friends can do that, with you. People who you trust, they can also do that. So that you have to be, you have to be aware of the get rich scheme, get that you'll get rich by doing this, by uh, putting this amount in this, putting this amount in this. That never happens. All of a sudden you don't become billionaire, right? So